You ever hear someone say, I lost all my retirement when the stock market went down? You ever hear somebody say that? Let me help you with this. That was a lie. I know in their emotions they felt like they lost all their retirement, but if your 401k were invested in good growth stock mutual funds, the worst time in the history, in the last 50 years, since the Great Depression, the worst we've ever had was 2008. The stock market dropped from, the Dow Jones Industrial was about 13,000, dropped to about 6,500, basically in half. And so that means if you had $100,000 in retirement, it became worth $50,000. Did you lose all your retirement? No. Did it go in half? Yeah. Does that suck? Yes. But you didn't lose it unless you cashed it out. It just went down. Oh, by the way, did it come back up to 13,000? Did you get all your money back? Yeah. Is it above 13,000 now? Yeah, try over 20,000. Yeah, that's your Dow Jones Industrial average. So look at those percentages. It went down in half, and now it's almost fourfold what it was at the bottom. So your 50, if you had 50,000 at the bottom, your 100,000 becomes worth 50, should be worth 200 now on stock market averages. So you didn't lose any money at all on your retirement unless you put it in at the highest point and took it out at the lowest point, which makes you like the world's worst possible investor ever. I mean, you bought at exactly the wrong time and you sold at exactly the wrong time. And then you did lose half of your money. But you didn't lose all your retirement money. You lost half of it. And the only reason you lost it was no one gets hurt on a roller coaster except those that jump off. Ride it to the end. Ride it out. Ride it out. Ride it out. Is this market unusually high right now? Yeah. Is it overdue to come back down? Yeah. Yeah. Could we see a correction? Could we see a downturn? Yeah. Yeah, you could. But is that going to be the end of the world? Nope. Going to be the end of your retirement? Nope. Am I taking any money out because of that? Nope. Am I putting money in every month? Yep. Have for 30 years. Why I got millions of dollars in there. Never stop putting money in. Just always put some money in. When times are bad, I put money in. Times are good, put money in. Why? Because I know, and common sense tells you, that over the scope of the next 10 or 15 or 20 years, are those companies we named off a while ago going to be worth more or less on average? On average, the best and brightest companies in America, 20 years from today, 15 years from today, will be worth more than they are today. It doesn't take a rocket scientist to figure that out. Now, will some of them go out of business? Yeah. But the best and brightest ones, which is who the mutual fund companies pick to invest in, sometimes they miss it, but by and large, they buy the winners more than they buy the losers. Are you going to be okay over the long haul? Yep. So when you hear about floods and hurricanes, spend all your time watching negative stuff. And then you start doing your investing based on the world coming to an end. And the world will always have trouble. And the world will always have good things. Always. Always be investing. Always be investing. Every time we talk to these millionaires in the Millionaire Theme Hour, you know what they tell me? We started putting money in our 401k, we're 25 or 35, and we never stopped. We never stopped. Oh, and now I have a net worth of 2.2 million or 4.6 million or 1.7 million or whatever it is when they call in. They just didn't stop investing. Just kept investing. Kept investing. Kept investing. Kept investing. It's what I do. It's what you should do.